Hey traders, Nick Shaheen here. I'm going to look at a few tickers that are in the news this week, most likely just today. From the earnings, for example, Okta is on my screen. Let's start there. Nothing here is actually an action to say buy it or sell it. I'm just sharing my opinions to see if I can come up with some levels that make sense to help people. All right, so I don't have any trades on Okta. I would trade it from the long side on big dips. I see that it's falling 4 or 5% after hours. But in this case, I mean, this is an active stock, a well-managed company. They're retail, but they're kind of special. Not the same type of retail, say, as Macy's used to be, because even though they have physical stores, they do have they don't have the same reputation as Macy's. They probably do things a little bit better. So buyable dips, in my opinion, blindly, and let's see how big of a dip and if it makes sense at this level. First of all, it's still aftermarket. This is December 3rd. Wow, I can't believe it. Every time I say it, I can't believe the year is over. So what happens tomorrow morning, we don't know. Look at Snowflake. It was down big time, opened up big time, or at least closed up big time. So what they do overnight, I'm not sure, but let's see. Assuming it opens right here, if I'm long, it's not a reason to get out of it. Let me see if I can read the headline as to if they meet or beat. So it sounds like it's a sales story, and it's more so about expectations, although in this case, I thought they delivered a better comp, less worse comp than anticipated, down 9% versus 12% expected. So just a matter of disappointment. If you told me if this was the time to get long, not knowing the earnings are coming of any ticker, not knowing that this was Okta, I would say no. I would wait until they go above 305 or 306 to chase it. I would say that the breakout happened out of 246, if not at worst 256, and those were prior failures that they took out with emphatic strength. So that usually carries forward. However, there was a big crash, you've heard of it, called the quarantine back in February, and that level right here where it came into before the close into the earnings was almost exactly that. There were a few pennies to close the gap entirely to 299, from which the close was that day. And in my opinion, in looking at hundreds of months, thousands of charts before, that's not usually a place where I want to get long. That's a place where longs book profits, and if they caught it. I usually wait for a dip to buy it to get out. So basically, what I'm saying, if this dip, if markets hold up in general, this dip is a buying opportunity, because what you want to see, what I would want to see, is a better setup for another thrust higher. So this is, by the way, what is it? Daily chart, so nothing fancy. So they're right here after hours, that blue line. Let's say they do this. As long as they stay above 260, which was a pretty sharp place they crossed, and it's important to hold, then they can come back and tackle this failure level. And if they do, you look, you can see that this is some sort of a giant bowl, right? Cup and handle, you've heard that. Usually they say it's as big as the depth. In this case, I'm going to disqualify this COVID situation. I shouldn't say the COVID situation. The COVID situation created the problem that actually hit the stores, which was not COVID, but rather the quarantine. The quarantine caused the disruption in business for everybody. So therefore, the P&Ls got clobbered. If you take that out, look, it's a nice bowl. And hopefully this is a small dip and they come back to it. Then you chase the breakout from 300. And how high can it go? It can go back at least to 340. But technically it should go back to 380. What am I drinking? No, this is what the charts say. That's there's a big ledge here to deal with from prior history, but it's doable. So don't fret, don't worry about the dip. It's an opportunity to get long. That's my opinion. Let me zoom out. Let me see here. What is this? Okay, so this is about a year's worth of data. I'm going to take a weekly. So I have notes on here. Look at all these lines, right? Let me walk you through them. This tells you that it does respect the technicals. So giant head and shoulders was brewing, and I drew this yellow thing here. On the bounce, I said I'd better not be drawing a right shoulder, and sure enough, it did. Now, how it unfolded was via crash. It had no choice, but the fact that I drew it ahead of time meant that it was just technical. And same here. So it does respect the technicals. If you look at that orange line that comes across right here, I did not draw that one. This one is drawn automatically. This is exactly where most of the trading happened, with a bar above it and a bar below it far exceeding anything else. What does that mean? This is a place where bulls and bears absolutely agree that it's worth trading. So they fight it out hard. What does that mean in real life? So should anything happen and the markets fall, this stock should have a lot of action down here. So action means if it's falling, it's going to hit the brakes. It's like a pad. And in fact, look, these two are not coincidences. This is not a coincidence. So these are sharp lines drawn. So if it falls, there's tons of support. So again, if I'm long the stock, this dip is not going to shake me out of it. That's my opinion on this stock here. All right, so next we will go to, what is it, CLDR, Cloudera. Okay, so Cloudera. All right, so I see it popping after hours. It's up 8%. It's 1250 right now. Let's see here. So this is where it is right now at the blue line. For exactly the same reason, this is not a place to start longs just based on the charts itself. I'm not speaking anything about the fundamentals of the company. So we can take a peek in a little bit and see if they're worth noting. But whatever they did, the markets liked it. So they are celebrating it. But buying a stock when it goes into a prior sharp failure is not what I like to do. What's ideal is for it to hit it, fade, build it again, and that's how you draw an inverse head and shoulders, or that's how you draw a cup and handle. If you think about it, that's what happened to the chart we looked at just before that in Okta. They went into a prior failure, then they lost some steam. So if somebody got stuck here, they're likely going to get out here. Sometimes they burst through, but rarely do they just go slice right through it to pass it like it was not there. So that would be my opinion. So I would be a little bit scared from that. I forgot to look at the key data here. Pretty cheap stock, 2.5 times sales. PE 57, don't really care much about that, but the 2.5 times sales is not a lot of hope inside the stock, so it's not likely to be a drag on that one. CLDR. Okay, so this one is also not too expensive that way. There's no PE to be measured. Free cash flow, not very big. So, there's nothing knocking on it here. Let's see overview, what people say about it as far as news. Strong revenue guidance. So when a company tells you they're going to do well going forward, there's definitely no reason for you to worry about it unless they're flat out lying. So the earnings report did not give anybody reason to sell. It looks like they were just nervous about it, and now they figured out, hey, you know what, I shouldn't be that nervous. I had an alert here, buy the dip. That's the wrong note, because clearly that's an old annotation that I did not change. But it probably said chase the rip because that was a prior failure. So tomorrow morning when it opens, it's going to beep at me, beep, 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 because it's above it already. And I would look and I'd say, nope, I can't do it. I will reset it to chase it from here on out if it beats 1250 after the small dip that it does. All right, so Docusign, I think, is another one that also reported. So I had the circle drawn from before, and I did trade it, and I had some sold puts and puts spreads, and I did note that at the time there was a huge head and shoulders that did not come to fruition, so I didn't I didn't worry about it too much. I also noted some important candles. So in other words, I trusted in the support it had, and the new environment lends itself to some services like this one. So there shouldn't be a debacle, a gigantic debacle. So this was the target, the breakout levels, the prior failure levels up here are the ones to watch now. So after hours, it's up at 240, 237 and change. I thought it was a little bit higher, so it may have lost some steam. after the initial pop. So I knew something was going to happen inside the circle, and now it's unfolding. The fact that it crossed the circle, now we look at it, what happens when they fall back into it? So I contend that we might fade into after the pop, but that would be just enough time for somebody who was eyeing it and now the event is gone. Now they can comfortably go long saying, hey, there's no headline risk from the earnings, because it's always a crapshoot with the earnings. You don't know what's going to happen overnight. So let me go lower in time frame. So this is where it is right now. So let's say tomorrow it opens, Friday it opens, and then it falls back down to somewhere around 228, 232, 228. This would be like a gift for somebody that wanted to get long. Even if it falls down to 225, I wouldn't be scared about it, because it looks like it's in the hands of the bulls. The whole market is in the bull mode. So by the way, just a reminder that everything I'm saying here has to fit within the caveat of the whole market staying bullish, like no major corrections. Up and down 1 or 2% doesn't scare me. I'm talking like corrections. So if the market's correct, nothing is going to go up, and all this is, let's look at support. And for that, it does have support. We just noted them, those green lines down here. And the volume profile, that orange line, that's also support. That's a place where they love it. So I can tell you one thing. If this falls into 210, I would be deploying some credit put spreads or sold puts in order to generate income out of everybody else's fear. So those would be my comments here. No reason to leave it. If it dips after a small disappointment tomorrow or the next day, it's a buying opportunity for a swing trade. And I would chase the rip above this, outside this zone. This candle right here, I don't know if you can see it. Let me take the drawings out. This candle right there. It's pretty interesting. So mark that level. What is that level? Where it's at right now. It's pretty interesting for a lot of reasons. Right here and right here. So it tells me that it's going to play a role. If they can close above it, I'd probably take longs as a swing trade. I could. So won't promise I will, but I could. I don't have a trade on it right now. All right, who else reported? Marvell? Is it Marvel or Marvell? I don't know. Okay, so they reported. This is a daily chart. They're down 6%, 5.8, 5. They're at the blue line. I love this blue line. Okay, so look at it. This is a place to buy the dip. If I wake up tomorrow and I panic selling out of it, unless they said something in their report that causes, like Splunk. Splunk said some stuff that should scare people because it's a growth company, right? And they missed on sales and guided lower. That you can't do that when you're a growth company. You can miss on profits. You can miss the earnings by a mile, but you can't. You'd never see Amazon miss on the top line. So if they do, they'll explain it. Anyway, shares 12%. Supply constraints. Guided in line. So okay. So it sounds like they had a situation, particular situation, but they don't think it's going to continue because they would not have guided in line. PE of 21 and price to sales of 11. This is too cheap given the price to sales. So this might be a little concern that the stock price is too high, but the profitability is too strong. So it's kind of stuck. Is it a growth company? Is it not a growth company? I don't know anymore. Let's see here. 2.3, 2.4, 2.8, 2.7. So it's not a growth company. So this is a, let's go to quarterly. Okay, so I'd have to look at it from the different prism. Now it airs on me. If it's not a growth company, then I don't want to give it leeway on the price to sales. It's priced two times more expensive than Amazon on a price to sales basis, and Amazon is a growth company. So this one, we'll see how it measures out. But from a trading perspective, the bulls are in charge. They will find footing going into 41.5. If that fails, I bet under 40, I would go very, very long in there. In fact, I'm going to put an alert in here, and I say go long, and 2 of 2. meaning that there was a level above it, and yeah, I'm going to put it right here and I'll show you why. So I have not traded this one yet. I've answered a few questions on it, so that would be an interesting test to see if it's liquid enough for me. If it's not very liquid, I don't want to mess with it. I'll give it a shot. I'll give you an example. I recently did a trade on Lulu. It was a winning trade. We entered it just before the pop and pop. I couldn't even book my profits because the bid and ask were so wide that the mid didn't matter. I was like, okay, I'll settle for the mid. Can somebody take it off my hands? I won. I couldn't get it. I had to leave money on the table just because it wouldn't fill. I hate that. There's no need. Same with Okta, does the same thing. So check it out. So I put this trigger right here for a very specific reason. That's one. I put the trigger right here for a very specific reason. So they visually pop as pivot zones. Let's say the market's correct and it comes down to 36. I load up big time and I will add here. So this would be the plan. Because even if it falls here, they're going to try to bounce, right? If they bounce and they meander, they're going to hit resistance after the fact. But if they bounce and they retest here, now it becomes like, uh-oh, is this an inverse cup and handle? If so, this is the target area. So, but then, you know, there'll be time to get out and manage. The assumption is they will hold the first pivot. And if it doesn't, then repeat the process here. So this is how you put a trade and you decide if you stop yourself out or not. That's how I do it. Sometimes I'll say, I'll put a trade on and I don't care. I'm going to face the fear. If it happens, it happens. I'll take the shares by selling put spreads. And if not, sometimes I'll say, you know what? As soon as it goes below this one, I'm wrong. I'm out. Arguably, this might be a little bounce right there. So in this case, I would not stop myself out right away. But it depends on the environment in which it's trading. So if the whole market is still, okay, up, down, that's okay, then it's not an issue. But if it's a market is falling, then it's an issue. Then I would have to respect that. All right, so this is Marvell. I don't know which one it is. All right, so somebody asked for Zscaler. So this is a stock I traded a long time ago, the breakout, and profited and got out. Clearly, I got out early, but it doesn't matter, and profits are profits. I don't usually look back and cry over it, then you won't last. So up here, that's what I call THTH. It's too high to chase, and it's definitely too hot to short. So this is where, if I'm not long, I have to admit to myself, dude, you missed it. You know, get it on the next debacle. I find it a lot easier to get long stocks on bad days if I have visibility on the chart itself. In this case, the breakout happened and they priced all of it right away. From here, there's no easy meat. The easy work has been done. So the red-blue is just a regression line, mathematically represented. So if you want to say something reverts to the mean, is when they overshoot, they revert to the mean. Look, they usually revert to the mean. They don't usually fall through the mean unless they have specific reasons. So in this case, they overdid it, they came back, they overdid it, they came back, and now they're overdoing it, and they're going to come back. So it doesn't need a crash. It just needs time for it to go sideways. All right, so there was another one, Octa. These two reported this week, but not today. So here's another pop that didn't last. This is better price action, in my opinion. It leaves something for somebody to catch up to it. So we have higher lows. We have a failure at a line. It's fine. You can fail as long as you're maintaining the buyers' control. Eventually, they will come to a point, and they will have to make a decision. So let's see if we can get smart about it. First of all, I love the fact that out of the June, we have a nice consolidation zone to establish a good solid base. So there's been so much action here. Look, you can see in the volume profile that it's just as much as the one down here. The fact that this is still the volume profile point of control by a little bit tells me that it had some sort of a back there. We'll go check it out. But that doesn't matter because it just spent months saying it's okay to be up here, people, for now. So we have now higher lows and failure. Higher lows and failure. If this continues, that's fine. And then it comes a point where it's like, okay, make up your mind. This or that. And that's fine. So this is where I would buy the dip if that happens. This is where I would attempt to buy the dip if that happens. And this is, sorry about the noise, my son is starting his race truck. And this is where I would buy the rip. If you want to be real conservative, you'll watch for this, or get long here. I would get long here, and with it paying attention that it might find some sellers up here. So this would be the trading plan for this guy. So this is a much easier stock to chart to trade versus the Zscaler that's just up and away. Those are the easy sense. I don't claim to know all the inside and outs of every company, but luckily machines do a lot of the trading, and that makes it easier for me to trade these companies because now the charts become like self-fulfilling prophecies. I said we will go left to see what happened. Let's go to a weekly chart. Ooh, dang. Yeah, so from here to here. So look, this, if I look at 5 years, well in this case it's history, this was the place where they've had the most volume. Look how far removed from reality it is right now. But doesn't mean it's coming back here. It just means it needs a lot of time to consolidate and build more volume up here. See these orange and blue lines? Look, this is where the bulk of trading happened. So these are volume bars down here. They tell you when the trade happened. These are volume bars, the same volume bars. They tell you where they happened. More important information than this junk down here. All right, Nick signing out. Hopefully this was helpful for people. 20 minutes, but I think it was worth it. Oh, by the way, disclaimer, I should have started with that. Nothing here is a recommendation to buy or sell. This is just me talking about charts.